Hey everyone, welcome to this week's edition of Title Scoop. So this week we are talking about policy amounts. I've had this question quite a bit lately. Seems like it's been popping up because people are trying to deviate from the policy amount, or people are trying to get owners' policies, after the fact. Maybe they inherited the property years and years ago, and so they're trying to see if they're covered or if they can get a new owner's policy. So unless your state has specific regulations, for the most part, an owner's policy is going to be the same amount as the purchase contract or the contract. So that's pretty cut and dry. Now, if there's not a sale and someone's coming and asking for an owner's policy, maybe they didn't get one and they're asking, sometimes we can do it. You do need to call your underwriter to make sure that all the criteria are met, but the amount, we're talking amounts today, is generally going to be the fair market value. Now, sometimes what happens is someone owns a piece of vacant land and they're going to build on it and they decide they want an owner's policy for the amount of what the property will be with the improvements. That can be done, but again, call your underwriter because we're going to need some documentation as to what that value will be once the improvements are completed. And we're generally going to want to take an exception to, if there's a loss, we're going to limit it to what the amount is at that time. So maybe they just have the foundation put in and there's a loss. In that case, we're going to limit it to what the improvements in the land are valued at the time. That obviously increases as the improvements are added. So we, again, just going to take an exception to make sure everybody's on the same page. Now, for a loan policy, generally speaking, it's going to be the same amount as what's on the mortgage or the deed of trust, right? It's going to match, pretty simple. But there are some exceptions where it may deviate, or maybe we have something a little different. Sometimes, especially on commercial, you'll see this. There may be collateral, not like the normal stuff, not like household appliances, things like that, but maybe there's a greenhouse or something like that that's not insured as part of our transaction, or maybe there's collateral that's real estate and they don't actually want that part of their policy. We can do that, and we can sometimes insure it for the amount that's on the mortgage or the deed of trust. We're again just going to need to take an exception. So again, if you get these that are a little bit off from normal, call your underwriter because we are going to want to take an exception to that. And that exception basically accepts out the collateral that's not included, and then describes sort of how the liability will be determined if there's a loss. And it's going to be, percentage of the debt paid versus like the ratio or the value of the property and the value of the collateral. So again, just want to set that out so we make sure it's very clear on our policy. Now, sometimes you'll have extra collateral, either personal property or real estate or both. And the lender wants to reduce the amount of the insurance. So they don't want to pay for the full amount of the mortgage because maybe there's several pieces of real property they're not including on the title insurance policy. In which case, again, we may be able to do it, but we're really going to ask the lender to show us the value so we can determine what is fair for the property that is being insured. So again, you're going to want to get with your underwriter. I know I said that like 4 times today, but get with your underwriter to make sure that we agree what you're insuring is right. And again, we're going to take exception on that because we want to make sure that the lender understands and accepts that the policy, that as the loan is being paid down, the amount of the policy is reduced in proportion to that insured collateral versus the total collateral. So again, we can give you that language if you need it. Now, leaseholds, again, you're usually seeing these on commercial properties, and it's sort of hard to determine the value, right? So if it's being sold, sometimes we can because we have a contract that they're selling their lease interest. But for the most part, it's really going to be where they're going to have to provide us why they believe the leasehold should be a certain amount. It can be determined by the leases, the length of the term, the rents, things like that. All those things are different values. So usually people are pretty savvy if they're asking for a leasehold policy and they're able to provide you different things for you to get comfortable with what the leasehold amount is. Of course, if there's a mortgage, the mortgagee has determined, and they can usually provide the evidence pretty easily. So if you get those, again, if you're not sure or if you have questions, just give us a call. We're always happy to help. And with that, we're going to keep it short this week because the last few have been a little bit longer. And have a great week, and we'll see you next week.